Hi guys, how are you? It is Pila here again. This is 3 months chart on US dollar versus the Canadian dollar. So what I want us to check here, I want us to prepare for what is going to happen or what is coming. Now, so what I'm going to share with you here is what I want you guys to do when you open your chart. This is what I want you guys to do when you open your chart. Make sure that this is what you're looking for, right? So what is important here is to identify where the market is coming from and where the market is headed. Right now, if you were to check, I'm on 3 months time frame. That means each candlestick that you see here represent a monthly. Each candlestick represent 3 months candlestick. Each candlestick is for 3 months. For the whole 3 months, you'll just see one candlestick. Same thing, same thing. So here is your major support. Here is your major resistance. This was 2008. This was hey, let me confirm. I think 2002, if I'm not mistaken. 2002, 3, yeah, that was 2002. Okay, now you can see that from 2002, the market went all the way down to the new support. It went up, it came back down, but it did not reach what? This new support. So what we're going to do now, we'll just move all the way up. We will identify this one as our minor support and a resistance. The reason why I'm going to identify this one as my minor support and resistance, it is because of it is inside the major support and resistance on this particular time frame. But you go to daily time frame, this is going to be your major support and resistance. If you recall, I've been saying this whenever you are trading support and resistance, always pay attention to the touches. This is your first time. The market came back to the support. It went all the way up to the resistance, back to the support again. Now the market is coming from what? From that resistance. The market might not come back to this level. Why? We will find out what is it we have here that can cause the market to change the direction to the upside. All right. So what is important here, guys, is for you to understand that when you approach the market, you need to know what you are doing in the market, right? So for now, let's move to monthly time frame. Let's move to monthly time frame. As we're going to be moving to monthly time frame, we need to also understand the structure. You can see that the market was moving nicely. It was going up since when? Since 2021, the market was just going up until 2025. The market is just moving to the upside only. Now, if you check here, you have your breaker structure. This is your resistance. This resistance level, it was broken. The market went up, it came back down. But if you check, they did not respect this broken resistance as support here. But that doesn't mean that the market is now moving to the downside. We have so many factors that can cause the market to change the direction right now here. So what you have to do here, you need to move with the time frame again just to see what happened where I highlighted. Because if you go to a line chart, this is what you're going to see. Let me remove this one and put it below. If you go to your line chart, this is what you're going to see. Here's our line chart. This is your resistance level. This is your support level on which time frame? On monthly time frame. Can you see that? Now, what we have to do here, we'll have to move to weekly time frame. Let's go back to the candlesticks and move to the weekly time frame. Now, what is also important here is for you to understand which pattern, which strategy are you using in the market. We can do all the analysis that we can do here, but what is important is for you to know what you are trading in the market. If you don't know what you are trading, you'll have difficulties becoming profitable in the market. Why? You'll start creating opportunities that are not there. So the best thing that you can do, try by all means to avoid opportunities that are not there. For an example, you look at this market and assume that, you know what, I can see that the market is now pushing to the downside. What are you going to do? You'll jump in and sell here. The market might go up. Why? It is because of you are guessing, you're doing the guesswork. You are not analyzing, you are not sticking by your rules or your trading rules. This is weekly time frame. Remember, if it is weekly time frame, you use the market structure. You can see that the market was creating higher highs as it was going up. Now you can see that the market was coming down. It was creating lower highs and lower lows as well. But you'll see that when we go to daily time frame. So what is important now is for you to understand that what is it that they left unattended on the left hand side. Whatever that they left unattended on the left hand side is what we're going to use to the right hand side. So looking at this one right now, you then check, okay, I notice there's a trend line there starting from here, pushing all the way up. The trend line looks like this. Can you see that? The trend line was broken a little bit and then they went up. This is a weekly time frame. I zoom in, you see the trend line, but if I zoom in, you notice here, this is weekly time frame. This candlestick, this one, the one that I highlighted, this one, went all the way to the trend line, and then it started rejecting all the way to this level. You go to daily time frame, they have respected this trend line. You'll see that when we are going to daily time frame. Now, if you check here, this is your break of structure and a continuation pattern at the same time. It means they will continue to push the market to the downside. And again, you will also confirm with it, this is your high. This again is your lower high, your lower low, lower low, lower high. Where is the market headed right now? It shows that it is headed down. This is your lower low again. Now, what are we supposed to get here? A lower high. Remember, whatever we do, we use our market structure to confirm everything here. We don't just jump in just because of we feel like no, the market's gonna gap up or the market's gonna jump. We follow everything according, right? Now I will erase and move to daily time frame. But before I move to daily time frame, I still have to push back and check. I can see here we also had a trend line. This is the first time touch of the trend line. This is going to be the second time touch of the trend line. Let's highlight again. It gives us something like this. Now, if we get something like this, as the market was going up before they break this resistance, they came back down. As they came back down, they created a new support, of which is going to be this one. You can also classify this one as a double bottom. You can also again highlight this one as a zone. It is up to you how you approach your support and resistance. I'm still on weekly time frame. Can you see that? Now, we will remove this trend line that was already broken. Now, if you check here, what is it you have still on weekly time frame now? Let me fix this one. If you check here, this one, if I adjust it, that's fine. This is your first time touch. This is your second time touch. Remember, I said when you are trading trend lines, you're going to get your entry on the third touch. This is going to be your third touch. Your third touch will also match with the support day on your left hand side. That means the higher the chance that the market will reverse here. But now, what are you going to do? You'll go down with the time frames, because if you move to your far left, you'll get this support that has two touches already. And then here you're going to get your third touch. But we're not going to pay much attention to the third touch for now. What we're going to do, we will move with the time frame, guys. This is what you do. Take your time. Don't just rush. Don't just rush. Right now, you'll notice that, okay, this is how it looks like. This is daily time frame. Looking at the structure, the market gave us a high, and then lower low, lower high, lower low, lower high. Same thing. You can see even if you use this one, but I'm going to use this one. And then you can see that the market is creating what? This is what we are looking for. Can you see that? Now, what is also important is to check what happened previously. You don't just focus on your right-hand side from here only. Pay attention to your left-hand side. Look at where the market turned. Come to your left-hand side and check what is it they left there. Whatever that they left here is what they're going to use again to the right-hand side. So whatever you do, make no mistake, go to your left-hand side, check what is it you had on your left-hand side that was left unattended. So we'll continue with the analysis, moving to smaller time frame. Smaller time frame you're going to get is going to be a 4-hour chart. So let's move to 4-hour chart. Looking at this 4-hour chart, it is clear, but not that clear, but clear. You can just see by looking at the structure. The market, this is 4-hour chart. This is 4-hour chart. The market was going down. It went up, came back down, creating lower lows, lower highs, lower low. And then the market went all the way above. Now, remember this, then, when you are trading price action using the market structure, this is how you confirm that the market structure is now already violated or validated. I don't know how to use the word, but now you can see this is your lower high. Your lower high was broken. What does that mean to us? Change of character, perhaps you can use that word as well. Now the market is moving to the upside. Here is your lower high again. Your lower high was broken. The market went up. As the market is going up, it was creating what? Higher highs. Can you see that? The market is going up, creating what? Higher highs. The market is also giving us the same thing. Now, this is our higher low. Can you see that? This is our higher low. This is our higher low. Now, if the market is moving to the downside, we're not going to do anything here. Wait up until they break this higher low. Now you know that, okay, we'll move to the downside and then we'll move again to this broken support as a higher low as well. Now you'll know that the market will continue to the downside. This is how the market moves. It is not moving on a straight line. Hence, you can see this was your lower high at your horizontal line. It was also used as what? As a resistance that was broken. It was also tested as support. Can you see that? So this is how you also confirm the break of structure. If you notice that, okay, as the market was going down, I had lower highs, lower highs. Now they have broken the lower high. That means now the market is moving to the upside. But always remember, whatever you do, always start from a higher time frame. Why it is important for you to start from a higher time frame? It is because of you see almost everything in the market. You are not going to jump in just because of you feel like the market might go down or you feel like the market might go up. You'll just go to a higher time frame and look for the direction of the market. As you're going to be going down with the time frames and whatever that you're going to be doing, you will do something that you know. You went from a higher time frame says that the market is going to go down. Whatever you're going to be doing on smaller time frame, you'll be looking for what? Selling opportunities. That's the best thing that you can do for yourself to become profitable. So looking at what is happening right now, take your horizontal line and place it like this. You can also mark it as a zone. I've said that before. You can trade support and resistance as a zone. You can just trade it as well, just by placing a horizontal line on the body of the candlesticks. So here you're going to classify this one as a zone. You're going to classify this one as a zone. I said in the beginning, use a line chart. I said according to my experience in the market, in the beginning of a new trend, what do you get? Supply and demand, right? Now, if I said in the beginning of a new trend, you're going to get a supply and demand, the market was going down, it went up, it came back down, and then it went up, and then the market came back down, and then you see that. What is it you get here? Now, look at this. This is going to be your lower low, right? Lower low again, lower high, and the market was going down. Now you notice that, oh, this lower high was broken. Now the market's gonna give me what? A higher here. Can you see that? Now you're expecting to see what? A higher high. Fine. After seeing that higher high, what are you also expecting? The market to come back to this level as what? As a resistance that was broken, to test it as support. Also pay attention to what happened here before they break this one. I'm on a 2-hour chart. You go to smaller time frame. This is just going to be your break of structure. Can you see that? This is the level that I am talking about. The market went down, it went up, it came back down, and then it went up again. This is your lower high. It was broken, and then they pushed to the upside. So whatever you do in the market, give yourself time to pay attention to what they did. By doing that, you know that you're going to be safe in most cases. So take your time when you analyze. Don't just jump in just because of you feel like jumping in the market. Make sure that you take trades just because of you know now you are sure that the market is moving to the upside or to the downside. Now let's continue to different time frame. Let's check. Now I wanted to show you something again. Now, if you check, this is the beginning of a new trend. They left a supply and demand. They went up, they came back and test. This is now your continuation pattern. They pushed the market all the way up. They came back down. There's your continuation pattern that pushed the market up again. The market came back down. Now the market is currently on the what? On the continuation pattern. If the market pushes all the way up, it will turn somewhere here and continue to the downside. It might also come back up a little bit because of this is going to be your support, and then it will break to the downside. Here's your new support. The market will move again to the upside. If you give yourself time to approach the market like this, you will enjoy each and every step of your trading career. And again, we also have chances of the market pushing to the upside. Do not approach it blindly. For an example, now you are not sure whether they're going to go all the way up or they will move to the downside. For you to be sure that now the market is selling, wait for the market to break this level. Once they break this higher low, expect the market to come down to this and it will go up. This is your entry level. You're selling. Why? Your support, because it's going to be broken, it will become your resistance. Now we're moving to the downside. Once you learn to do this in the market, everything will become simple. I know that this one is more challenging. For an example, you know that this is 2-hour chart. It means each and every 2 hours you're gonna see a new candlestick. Each and every 2 hours a new candlestick up until. So how long are we supposed to, or are we going to wait for the market to reach this one? I don't know. It will depend on how the market's gonna be moving. It will depend on how the market's going to be moving. If the market pushes down to this and test it as support, we will also observe what is the market going to do. Here they might create a continuation pattern. We don't know. We will just see what they did. And then if they break, we're not going to jump in immediately. This one might give you entries roughly tomorrow if it breaks. Not unless it will just give us a long candlestick like this, because I can see that we're gonna get news somewhere. I don't know how they're gonna come out, but if they just penetrate and go down, you know that they will push to the upside like this, and then you're gonna get your entries. You move with the market again. Let's move to 1 hour chart just to see what is happening on 1 hour chart. I think we can even move to roughly 30 minutes to 15, I mean. Right now, if you also check, this is your resistant. You're going to mark it as your resistant. Do not forget, you can also mark it as your zone. This is what the market did. Now, on this particular chart, what is it you have? Use your line chart, you'll see, even though it is not that accurate, you're going to get a double bottom. Go back to your candlesticks, it looks like this. If you know how to trade a double bottom, the market gave us the support here, it went up, it came back again. Now, if the market moves to the upside, you now know that you're going to get your entry. Again, when the market comes down to this level, you get in, you continue to the upside. This one will want us to move quicker to smaller time frame so that we can have more clue of what is going to happen here. Let's move to 30. Yes, if the market breaks this level, I'll just use the line chart. Why am I using the line chart? This is where the market actually turned. If they break above, this is where you're going to exit. This is where you're going to exit. This is your new resistance on this time frame. The reason for the market to turn here, it's on your left hand side. So now you have a new resistance here. They'll come back for this resistance again. They might even not reach this resistance because of you got a supply and demand here. You're not going to see that supply and demand up until I use a line chart. Can you see the supply and demand? So whatever you do, guys, take your time. Don't just jump in just because of you feel like, I know what the market's going to sell, the market's going to sell. We don't guess here, guys. Once you start guessing, it's the end of your trading career. So for you to become profitable, know what you are doing in the market. Know what you are doing in the market. And once you start doing that, you'll see the magic behind everything. You'll see the magic behind everything. It's all about you waiting for your opportunity. You don't just jump in just because of you feel like. We don't feel here. We don't feel here. My feelings were shame cholo in Bafetu. Mauzala, you are here to work. You work based on what is presented to you on your chart like this. You work based on this, not based on your feelings. Because if you're gonna work based on your feelings, you'll keep on blowing over and over and over and over. Another reason I'm gonna add something else. This is 15 minutes. You have this continuation pattern. Can you see that? Someone will look at this continuation pattern and be like, this one is very strong. That means the market will just reverse and move to the downside. This is 15 minutes. You go to higher time frame, you have a huge continuation pattern there. You know very well that they are not going to respect this one. They'll just push the market to the upside. Because this one is not on 30 minutes, not on 1 hour, it's not on 45 minutes. The chances of them respecting this one are very small. That is why I prefer to trade on higher time frame. But that doesn't mean that continuation pattern on 30 minutes are not working. Continuation pattern on 15 minutes are not working. My preference is from 1 hour going up. Let me stop here for today, guys.